Managing a business in a complex and fast-moving world can be a daunting prospect. At Standard Chartered Bank, you can trust a financial partner who understands the unique needs, challenges, and opportunities in your industry. Let me show you. We find opportunities for industries to transition, providing transition finance as our clients take important steps on the journey to net zero, moving carbon-intensive sectors towards more sustainable practices and driving a more resilient, clean tech-focused future. And speaking of future, we're unlocking opportunities through innovation in technology. And together, we'll discover sustainable supply chains you may never have imagined for tomorrow's consumer. And achieve infrastructure results that bridge what is with what can be. We help you see the world differently, so investors can do well by doing good, supporting sustainable growth here and in many places. Because opening doors is what we do, and good can't wait. We are Standard Chartered, here for good.
Thank you. Good afternoon and welcome everyone to the panel where we'll be discussing the role of private capital in sustainable infrastructure and net zero cities. We are joined today by an esteemed group of panelists who actually are responsible for deploying billions and billions of capital towards sustainable infrastructure. We have Ms. Bridget Lee from Keppel Capital, Jackie Surtani, who's the director now, soon to be based in Singapore for ADB. We got Chen Hua, who's the fund partner at I Squared Capital, and Thoma, who runs NG in Southeast Asia. Now, throughout the last couple of decades, we have seen a strong wave of urbanization, which has meant that cities are now the powerhouse for global economy. But unfortunately, they are also responsible for almost 70% of the carbon emission into the atmosphere. Now, to meet the world's climate goals, we need to reinvent almost everything about our infrastructure in cities. Now, whether we call it for carbon neutral transport, an unbreakable supply of renewable energy, we also need buildings which are energy efficient and environment friendly throughout their life cycle. Now, some estimates actually say that it will cost us about 40 trillion US dollars over the next 20 years for us to achieve net zero cities in almost every part of the world. This will be a stretch for public finance by any imagination. We need help from all of you to achieve this goal, whether it is corporates, funds, multilateral development finance agencies, everybody needs to do their part. Now, this problem is a lot more acute in emerging markets where Standard Chartered has a very strong footprint. We feel that the gap for private investment to come into various different sectors has widened, and investment landscape has largely split between what I would call investable sectors for private infrastructure and uninvestable or challenging sectors for private capital. So on that note, Bridget, would be keen to hear your views on what Keppel would consider as sectors which are more investable for you. What are the challenges that you face, and which countries do you think have done better than others? Would be great to hear from you.
Okay, thank you, Shankar. At Keppel, I think we are a global asset manager and operator, so that's how we differentiate ourselves. And we're very focused on creating sustainable solutions for the future, for our clients and for our investments. So particularly as we move forward to a net zero future, the focus for us is in 3 or 4 key areas. One particularly is we play in the energy transition space. Over the last 12 months in 2022, we already invested close to 3 billion in the renewable space, power renewables in Europe and Asia. And so that's an area that we particularly focus on in energy transition. As we go into to renewables, we also play in the gas space too, as we get out of fossil fuels. Yeah. The other piece is environmental solutions. That's a piece that we have deep operating capabilities, where we have proprietary waste to energy waste management capabilities. So that's a space that we have invested quite extensively in globally, but also in Asia, specifically in Korea and Singapore, where we invested in 2 companies, that we can therefore add value to these operating platforms. Moving forward, beyond environment also include water, ensuring water safety. So in Singapore, for example, we have developed a water desalination plant, the first in Singapore, dual, saltwater and reservoir water. We are also the first to bring in importation of hydrogen into Singapore. We're also developing a hydrogen-ready CCGT power plant that will be ready in 2026. So a lot of these areas is where we are hoping to build for the future. Yeah. On the social side, in terms of sustainable infrastructure, actually, we also want to invest in areas that we think we can contribute back to the society, like education and aged care. The other piece that we all know is real estate. I think globally today, 60% of construction and developments contribute 60% to the carbon emissions in the world today. So we feel that by turning buildings from brown to green, that's a way to future-proof and therefore reduce carbon emissions. So these are all the key areas that Keppel does, and really bringing our deep operating capabilities to bear.
Yeah. Thanks, Jackie. Sorry. Thanks, Bridget. Thomas, maybe I'll go to you because Bridget was mentioning about buildings. And I do know that NG does a lot of work around district cooling and energy efficiency. So to your mind, what role do you think NG can play as an investor, as a consultant, energy efficiency services provider in this value chain? And where do you think the most potential lies from your perspective, which sectors and which geographies?
Oh, thank you, Shikar. So just maybe by way of introduction, NG, we are focusing on accelerating energy transition. So we're basically helping any type of corporate or public body to consume less energy and greener energy. When it comes to the real estate sector, indeed, we are facing with challenges. A urbanization rate that makes the demand increase in terms of energy, in particular in this area of the world. Population are becoming more and more urban. And so tackling the sobriety and the renewable characteristic of the energy that's being consumed by our buildings, it's absolutely essential. So we're focusing at NG on playing across the value chain. First of all, deploying as much as possible renewable energy so that the electricity that is consumed by our buildings is as green as possible. To the maybe uninvestable thoughts you had in the introduction, I think what is critical in our markets regionally to enable more renewable to be deployed is to make sure that wherever the green energy, the renewable energy is produced, there is a way to link an output and a consumption. So a way really to accelerate energy deployment for NG at least is really to work on market design and contractual framework that really allow flexibility between sources of production and of consumption. So renewable is a big focus, but then the usage of energy is another absolutely essential area. So you mentioned district cooling is one of our key focus at NG, especially for this part of the world. The cooling needs are a huge component of any building energy consumption. And this component is meant to increase with urbanization and with global warming coming a longer way. So think about mutualization of usage, circularity, district cooling. When it's properly designed, properly implemented, can help save 20, 30, even 50% of energy consumption in some instances. So we are very, very big promoters of that type of solution. It is definitely a needle mover for Southeast Asia, but it has an inherent complexity, which consists in convincing several people to use this type of infrastructure at the same time. And here, I think governments, cities have a big role to play to promote the solution at design stage. That type of solution can be mandated, can be supported, but it is very important that, that public authorities really market the interest of such a type of infrastructure. And then at the end of the value chain, there is the way we use energy. It's not really infrastructure play, as we might think of it naturally, but the way we operate our buildings, the way they are becoming smart to adjust energy usage to the number of people in a room, to the weather outside, and there are a number of examples, can make a huge difference. So by making our buildings smart, operating them better, without necessarily investing huge amount of capital, you can also move the needle. So we're really trying to play all across the value chain. I will just conclude by saying that whether it is with renewable energy, district cooling, or energy efficiency within buildings, decarbonization means less energy, usually, and means as well savings. So we are lucky right now that we're playing on a field that, if implemented well, benefits economically to our clients and provide attractive business case for private capital. And so I see that as a real opportunity to accelerate and deploy massively solutions that will take us to net zero.
Thanks, Thomas. Chenhua, from your perspective, given that you run a fund which has a limited life and infrastructure asset classes are generally fairly long term, how does sustainable infrastructure and net zero cities fit in your investment criteria? What would you be looking at, and how are you looking to use the immense resources that you have and your fund has at your disposal to help us achieve the net zero cities dream that we have?
Sure. So I think sometimes when people talk about infrastructure fund, people are always confused with regards to the fund life versus the underlying life of the assets. I think the role infrastructure plays is more like an enabler for people to think about how to establish, how to develop these energy transition infrastructures, so that once this sector is being developed, it can deliver these assets to the market and allow more and more private capitals to come into the market. And once this asset is being matured and well developed, enter into operational stage, pass on to investors like pension funds, like sovereign funds, so that we complete our mission. Maybe a quick intro of I2 Capital. We are a global fund manager of $37 billion. We oversee equity fund, credit strategies, as well as energy transition strategy. We also venture into what we call technology investment, where the technology, we think it is the enabler or the disruptor for today's infrastructure investment. I think the main sectors that we focus on is one, energy utilities, and of course renewable is our key focus. The second is transportation, but as said, the electrification of the transportation, decarbonize of these transportation assets is our key investment theme nowadays. And the third is environmental infrastructure, where we are looking for circular economies, reduce the landfills and the carbon emissions in the waste incineration projects. And then the fourth pillar is telecommunications. We are also working with the technology providers to decarbonize our data centers. And then the last one is social infrastructure. We invested in senior homes, schools, but by the time we develop these facilities, we are trying to have these buildings certified by the LEED so that we can make sure the energy efficiency is well monitored across these segments. But as said, I think I2 is a leader in the innovation of technologies, especially in the decarbonization process. Give some examples. We are the leader in the floating solar technologies. We developed and built the first world largest floating solar on the seawater in Taiwan. And back then, nobody dared to enter into this space. Even the lenders that we approach are not willing to provide us the financing. And we invest 100% equity base, and we demonstrated the feasibility of the project with initially 2 megawatts, and then subsequently, we built a 500 megawatts floating solar in the west coast of Taiwan. If you Google it, Changhua, which is one province in Taiwan, solar in Taiwan, you can find this project, and you can even see it on Google Earth. And we also invested in hydrogen. A lot of people talking about hydrogen, but hydrogen, the economics may not work. But we made the first investment in British Columbia in Canada, where we built these hydrogen refilling stations that allows the government on the trucks, bus to use the hydrogen. And the reason we are able to do this is, of course, partially because of the government mandatory requirement for the public utilities to use these hydrogen. But on the other hand, we partner with the technology providers that can provide this storage of the hydrogen, production of the hydrogen, and provide these products in the market and put it into work. So I think the role of infrastructure manager is more coming from enabler instead of thinking of us as a long-term holder of the assets. And this is how we create value and, of course, deliver a more sustainable infrastructure to the market.
Thank you. Jackie, if I may, apart from highlighting how you see ADB playing into this, would also be good, given your background, if you can share a little bit about, from a government perspective, what policy measures could be introduced. We have seen countries introduce viability gap funding for some of these, call it slightly more challenging sectors, to help introduce private capital. But we are also seeing challenging situations where governments are stepping away from these, and we are not getting enough benefit of private capital pouring into countries. So it would be good to hear your view on that as well, apart from where you think ADB can play a good role, a strong role in helping developing markets come up in terms of developing sustainable infra and net zero cities.
Yeah, no, thanks, Shekhar, and thanks to Standard Chartered for inviting me. I mean, maybe just a little bit of an explanation of the Asian Development Bank. So first of all, I mean, the way I like to explain the Asian Development Bank very clearly is take the 3 letters in our name. So A is for Asia, obviously, so we're focused on Asia, but I think one of the key things for us, and to your earlier point, we're focused on what we call developing Asia. So it's easier to explain. We don't lend to Singapore, Korea, Japan, Australia, Hong Kong. These are what we call developed parts. So we're really focused on where, as a development bank, we're needed. So the D is development. So we really, the type of projects that we do have to have a very, very clear development impact. And speaking to one of your colleagues before we started, our real role is what I call crowding in other sources of capital. That's really our role. So, we want to bring in commercial banks like Standard Chartered. We actually have done 2 B loans for renewable energy projects in Vietnam, and never to crowd out any sources of capital. If there are markets, and a lot of good markets here in Asia are flush with liquidity from the commercial banks, that's great. Similar to what Chen-Hua was saying, and I like what she said, our role as well is not to be in there for the next 30 years in a deal. If there are other more efficient sources of capital, whether it's the bond market, whether it's commercial banks who want to take us out, that's great. That's our role as a development bank has been achieved. And then lastly, the B, and this is where people get confused. We are a bank. We are a AAA rated bank. And so when we do provide long-term money, we're looking to get our money back. And so some people sort of mistake us for a charitable organization. We're not. To your question, I mean, again, one of the big differences, I think, between ADB and, say, if people are maybe more familiar with the World Bank and IFC, World Bank does government lending, IFC does private sector lending. The beauty about ADB is we're headquartered in Manila, in the Philippines, where I currently am, and as you said, I'm going to be shortly relocating to Singapore. We do both sovereign lending and private sector lending. So I'm from the private sector part of the bank, which we are really looking to boost. And again, the whole theme of this conversation is how can we do more on the private sector side, but a large portion of our lending is to governments here in Asia. And I think that complements each other very well. And so, of course, we are talking to governments all the time on reforms, on policies to encourage more private sector lending. Viability gap funding is key for, say, things like water projects where you're taking municipal risk. But there's so many other ways. We're looking at providing, for example, guarantees to off-takers who are not that credit-worthy, and then get a counter-guarantee from the government. So there are many, many different ways that we can work with the government. We have something called the Office of Public-Private Partnership, which does a lot of the upstream work to bring good quality projects. I mean, one of the last things I'll say, one of the big challenges here in Asia is I'm not concerned at all about actually sources of capital. There's plenty of capital. The big challenge for all of us is, and I love what you said about all of us having to work together, is finding good bankable projects that we could all be part of. And that's where we all need to be a little bit more innovative, think really carefully about risk appetite. There's a lot of perception that Asia is risky. But I think you need to really have a fundamental understanding of some of the markets here and work with very, very strong players. I'm surrounded by two, Keppel and I Squared, and Engie, my old friend Tomas. So really work with really strong clients. That's what we want to do. And come up with solutions rather than problems. I'll stop there. Thank you.
Thank you, Jackie. I'm sure there'll be a lot of people interested in the guarantee program that you mentioned to bridge some of the challenges on the projects. Based on what you have said so far, I think all of you are already invested or supporting the sourcing of energy, whether it is through renewable sources or it is through hydrogen, the projects that are coming up. But that's just the first part of the chain of getting to net zero, because we are not at a stage where our energy production is completely net zero. So we do need to look at efficient usage and efficient transmission and distribution of energy as well. Now, going down the chain, there is a lot of discussion and investment going into electric mobility, right? Other transportation sources. From a city net zero perspective, my view is that mass rapid transport businesses should be something that all cities need to develop. But there are challenges around it. Maybe I would ask Bridget if you can share any views on your thinking around that sector, and also add in a bit of view around real estate. New real estate, making it energy efficient is slightly easier, but what do we do with the existing ones?
Yeah. I think smart mobility, that's definitely an area that Keppel is very involved in and engaged in. I think EV cars and transportation modes is definitely a future. I mean, we have a lot of incentives now that is promoting this in Singapore and around the world. So we are operating in the EV charging space in Singapore. Nevertheless, it is a process. It is at the beginning, and we are facing challenges, in competition, in getting the land, and I think it's not an easy task, not an easy road, but I think with more take-up, and I suspect there will be consolidation over time as well. But that's a space that we like. Obviously, we will look beyond Singapore and in the region. So that's a space that we are very focused on. The other piece on real estate, I mentioned earlier, we're very focused on ESG. We want to convert brown to green because instead of tearing down buildings and then rebuild, actually we are creating more carbon emissions. So what we believe in certain markets, we can actually see a lot of good old buildings, good bones, that we can then add a lot of value by converting brown to green. So we've done that in Singapore, our HQ, which is a 20-year-old building. We're very proud of it. It's the first building in Singapore that's powered 100% by renewables. We did not move the tenants out when we did the retrofit. We did it pre-COVID. We did it level by level, so that took a while, but we managed to reduce energy efficiency by 30%. And I think the amount of capex that we spend is only less than 2% of the value of the building. And I think constantly as we move forward, it's not the end. It's a constant process, to continue to improve the energy efficiency. So we're still doing it, we will have to take time to continue that process. So we believe in that market, and there's a lot of buildings in Asia that we can provide that technical assistance as a service and also as an investor. Yeah. So with that, actually, we have created a fund just focused on sustainable urban renewal, focused on several cities in Asia. Yeah.
Thank you, Bridget. So, Thomas, NG has experience in working in a lot of emerging markets. So when you have gone and started the transition journey, which is almost a decade back or even more, and you've started to expand sectors outside pure play power generation into energy efficiency and other sectors related to net zero cities, what are some of the challenges that you have faced? And do you see a way to address some of those challenges?
It was a very easy journey. No, so we moved away from very centralized, big projects secured, to a much more decentralized, agile world. So projects are smaller. Sometimes they are less capital intensive. You have to have a different risk assessment, more having taking a portfolio view rather than an individual project approach. So it's really a mindset shift that goes with the mindset shift that anyway we will all have to go through moving towards a net zero world. Each building will become energy producer. Each building will have to, building or manufacturing, it doesn't matter so much, but we'll have to implement energy efficiency measure, and that comes with interconnection, smaller projects, a level of an approach that's completely different, if you wish. So we had to go through this revolution within NG to deal with smaller, more interconnected projects. In that world, I would say that some of the hurdles, especially in the markets we operate in the region, are relating to how easy it is for a foreign player to play. And so partnership has been a really great way to work around some of the constraints that exist still in some of the countries in the region. I always advocate for more openness in that area because whatever we create when the solutions are so local is local value creation. It's our projects create local jobs, they rely on local financing, they benefit the end user by bringing savings, and so it pleads a lot for less foreign ownership restriction. But that's one of the hurdles we are still facing. I think in terms of market design, I was referring a bit earlier to corporate PPA to allow a bit more flexibility between energy producer and energy consumer. There are a lot of things that can be done from a market design standpoint to allow more flexibility and to maximize the potential of each building. And Singapore is a great example of what can be done in that space. In Singapore, when you want to deploy a solar rooftop solution, you can really maximize the space available. And it doesn't matter so much if the building itself does not consume the entirety of the power produced. You can export the balance to the grid, and you can still monetize your investment. So that's a win for the end user because you can allocate part of your value creation to the way you remunerate the building owner. That's value creative as well for Singapore, which is in sheer need of access to green energy, development of green energy. And for us, that's more sizable capital that we can deploy. So that's, I think, pleads for more flexibility, a market that is more open and that allows interaction I was mentioning, that comes with the new energy landscape that net zero will drive. And then easy fix probably can be implemented around regulation. Again, Singapore is a great example. Singapore has started to implement, and I'm sure at Keppel you have felt it and you have moved along with it, but more and more stringent regulation about the efficiency of buildings. That can be perceived as a hurdle, but if you give the time to the industry to adjust, you'd be very, very surprised of how innovative we all collectively be to achieve real gold standard in terms of efficiency and quality of our operations. And in time, it becomes beneficial for everyone because the end users then invest into energy efficiency. Third-party players like ENGIE or similar companies can deploy solutions that make sense both from an energy efficiency standpoint, but also an economic standpoint, and everybody's a winner. So the road is long, but we are lucky again to have at our disposal a set of solutions that can bring today massive savings financially, but also from a carbon standpoint. So I'm, again, very optimistic.
Thanks, Thomas. We all need the optimism here, otherwise we'll never get to the target we are looking at. Jackie, if I can ask you, you mentioned about ADB's role where you go in as one of the first capital helping develop some of the more challenging projects. In your experience, where do you see ADB playing a bit more role in terms of sectors, where you think you need to kind of lead the way before all the other capital sources can follow? If you could give us some examples of where that can go, where private capital is leading, and then other private capital where we have here can follow your lead from there.
Yeah, no, Shekhar, happy to. So, and I'll give you some very recent examples to drive home the point. So we closed, a couple of months ago, we closed a 600 megawatt wind project in Laos. Now, most people, when you hear the word Laos, they're already heading towards the doors. But this is a 600 megawatt project selling 100% of its electricity to EVN in Vietnam. So it's cross-border. That's number one. Number two, it actually benefits the people of Laos and the government of Laos. Laos has got abundant natural resources and it's got great wind potential. It doesn't need that power, so it gets to export it. They get some royalties and everything. Now, how do we structure it? You need a bank like ADB to bring in what we did in this case. We brought in $60 million of concessional finance to really structure the deal by providing, instead of a 6-month debt service reserve account, you provide a larger debt service reserve account. Curtailment is a big issue, mitigate curtailment risk. And by structuring the deal in a bankable way, and again, this is the point that I want to drive home, is we raised $600 million. ADB provided, again, this is public, ADB provided $100 million, but what's more important is we brought in Thai banks, international banks, and other DFIs. And that's the kind of deal we want to do, is where we're bringing in, we're mobilizing for that 60 million of concessional financing, 10 times of real commercial financing, and not only from ADB. So that's one example. 2 days ago, we signed, and I just came in from Indonesia, we signed a plastic recycling facility in Indonesia. And plastic recycling, I mean, a few days ago was World Environment Day, right? So, and World Environment Day specifically called for, for us to all combat plastic pollution. It's a huge problem here in Asia. And again, we supported a company called Alba, which actually is now based here in Singapore. It's a fantastic company and working with a local Indonesian partner called Tridi. And they've set up, they're going to recycle, collect used plastic bottles in central Java, and then state-of-the-art factory coming from Germany, and then recycle these bottles. We need more of these kind of projects. So our role is to really go in and do these kind of sort of super cool first stage projects, but then to attract attention to the rest of the market. And I just want to very quickly touch on, in the last example, your question to Bridget about the whole space of electric mobility. I'm very, very excited about this. And I think markets like Singapore, and in our case also a market like Thailand, we use these markets to do these electric mobility deals. So we've done electric ferries on the Chao Phraya River. So if anyone's been to Bangkok, you've got these sort of very old, dilapidated boats chugging out a whole bunch of smoke, not the safest. Now, we've supported a private sector company called Energy Absolute, building electric ferries on the Chao Phraya River. They're safe, they're clean, wonderful. So that's the kind of stuff. But then use that kind of model to replicate that structure, electric buses, electric ferries, into other markets in Asia. And that's what we're trying to do, is to use it, do it in one market, and then try and replicate it in others. And I think that's really our role. And we hope, the best success, indication of our success is other people start copying us. That would be fantastic. Thanks.
Thanks, Jackie. Chenwa, before we started and got on the stage, we were talking about Cambodia and Laos as well. Now, obviously, some of these countries, their sovereign credit grading is not going to improve overnight, but they all need to be moved along together for us to achieve the global net zero targets we have, the target that we have to making our cities and urban population going towards net zero. What kind of role do you think a fund can play in this journey? And have you faced any specific challenges in this journey?
Yes, I think a very good question. So I think to start with, iSquare hasn't made investment in Cambodia or Laos yet. I think as ADB correctly pointed out, for a fund manager like us, we need to balance our ESG goal with regards to the risk of the underlying assets. So how do we address that? This is a very practical question. So when we venture into the market like this, usually we don't take the government risk, but regulatory framework is important. What risk we take? We take the consumer risk, i.e. we hope the counterparty is not the government, the state government, the national government. We hope the counterparty is the consumer, the households, the CNIs, so that they are the main drivers to pay to us. So you have a very well diversified customer base instead of relying on one counterparty, which is usually the risk that people are concerned about when you enter into this market. This is number one. Number two, in these markets, infrastructure are not very well built. So therefore, you cannot rely on a centralized infrastructure to build out large-scale projects like what you usually do in Japan, in Korea, in Taiwan. What we can do is a distributed model where, for example, we are quite a pioneer in the distributed solar space in India, where everybody actually invested in the utility scale projects back then. But we all know the state government of India sometimes they delay in payment or they default, right, to the very extreme case. So what we do is we invested in distributed solar projects in India so that we only target Fortune 500 company, national corporations, so that the counterparty risk is extremely low. The bad debt ratio of our portfolio is less than 1%. You think about the power of CNI. And then the good thing, of course, in India, the government reacted in a very positive way that they allow us to, have this open access so that instead of just, focus on the rooftop strategy, we are able to build large scale and subsequently sell to the CNI customers. And this model has been replicated, across a lot of developing markets. Even in developed markets in Asia, the government started to promote this open access so that the renewable developers is able to sell the power to the CNI instead of relying on the government to subsidize this model. The other example, I think, is the demand response, energy shifting models, where usually utilities would like to play these roles to do this, and then you contract with utility. Of course, the counterparty risk is very high in our view when you venture into this emerging market. But as long as the government provide the regulatory framework, meaning that you are able to use the customer promises to stabilize the grid, you can use their customer promises to install the batteries or to install the smart metering, like what we have done in India. You are able to use the customer's power to smooth the energy usage curve and stabilize the grid operation. So you think about that, so that when you enter into this market, you are able to mitigate the risk, the typical risk people face or are scared of, to basically enable you to get into the market without overexposed to this kind of sovereign risk. And at the same time, I'm pretty sure by the time we work with the lenders, their preference is also to expose more to the end customer risk instead of concentrated to the sovereign risk. So I think this is the approach that we take, especially when we venture into a new market like this. But as said, I think usually the preference is to start with a relatively more developed market like the Philippines, Vietnam, Indonesia. Of course, a lot of people complain about Indonesia itself as a market. But I think we do see positive development across these markets over time. So enough patience need to be built up among the investor base, and then at the same time, a lot of lobby work, education work needs to be conducted in these markets.
Thank you. We probably have time for 1 or 2 maximum questions. Anybody from the audience has anything for the panelists? Maybe the gentleman here.
Yeah, hi, Adil Qazi from Standard Chartered Bank. So maybe from the panelists about, sort of us being a commercial bank, what would you think we as a bank could do differently or more of?
Okay, who would like to complain about Standard Chartered here?
Work more with ADB.
Maybe one from here quickly. That was very nice, Jackie. Thank you.
Thank you, and great perspectives and work that you're all doing. So thanks for the time. Eric Pascal from Standard Chartered. I'm in the cash area. I look after digital currencies, which does not mean we're trading BTC and ETH, but it does mean we're very heavily invested in blockchain. Wanted to get your sense. I hear a lot about specific pinpointed resources that are going to work in CCGT, as you mentioned, with hydrogen, specific issues with property, buildings, large scale, multi-residential that will produce its own power and then sell excess to the grid. Very interesting, but I wanted to pivot a little bit to transportation, since we're in net zero cities. To me, I think, and I've I've had the benefit over the years of working on many infrastructure projects, including power, a lot of power, actually. And transportation is increasingly going to be a large-scale consumer of power. And so as we pivot and we move to EVs, electric buses, even large-scale interurban trains, ferries, shipping, et cetera, these are all going to produce what I think is going to be a measurable, significant demand on power generation, distribution, transmission, et cetera. All of those elements are becoming increasingly green, but given the topic of net zero, how do we balance that? And are we actually moving the carbon saves, shall we say, from an electric bus and replacing it with carbon production from larger power plants effectively? And sorry, I know we don't have much time, but also wanted to get your philosophy on scale, if that's okay, because I hear a lot of different pinpointed projects. Again, how do you scale this to make measurable differences outside of Singapore? When you think of developing markets that don't even have viable or, let's say, extensive transportation networks and are struggling, honestly, with moving away from coal or even gas-generated CCGTs, et cetera, as sources of electricity.
Thanks, Eric.
Sorry, that's a lot. Yeah, okay, I could go on, but I won't. Thank you.
Maybe a quick response from Thomas, and Bridget, maybe 30 seconds, if I can.
Yeah, now very quickly, I think you have to assume that the grid is going to become green. And that means that electrification in the case of bus, mass transit, and cars is definitely the way to go. And really a no-brainer. As it proved in Singapore, I think we're on the way to switch towards 100% EV. I think Europe is in the same agenda, and that's definitely the way to go. There will be some other usage that will rely on molecule for heavier transportation. So electrification will not be the solution to everything, and net zero usually doesn't come with a one-fit-all answer. So that's the general remark across the board. When it comes to going outside of Singapore to other markets, I think transportation challenges are extremely market-specific. What will work very well in Singapore, we are currently deploying the charging infrastructure to support EV adoption in HDB car parks, but that will work very well in Singapore. Can you do the same, say, in Malaysia, say, in the Philippines? Probably not. Does that mean that there will not be an EV wave? I don't think so either. I think it will make sense. People will probably deploy their charging system at home. That means there will be different usage, different business model to implement, and you have to be careful. The main challenge will be to go bull's-eyes before it's the right time, before you have understood really what business model is appropriate to fit with the market. But in time, EV is the way to go.
Thanks, Thomas. Maybe Bridget, last 10 seconds.
I think it is, I agree with Thomas about the different markets in Asia especially. Each country is very different. So I think in Singapore, it's very different. It's a developed market and it's a very small market. But we have looked at opportunities across the region, including Korea, Australia, and other places for the smart mobility space. And I think there are opportunities that we can work with local partners and then get into the play and help them to scale. I think that's where our capital source can be useful and where our expertise can come in to help them to optimize or develop further.
Thank you. If I could just do a last couple of takeaways that I've heard, because overall, it has been a very positive discussion. Very few challenges, it seems, all surrounding policy, regulatory measures to support. But when we talk about capital providers from private side, whether we start with the first stage capital, whether we talk about funds, whether we talk about long-term holders of capital, long-term holders of assets, everybody seems to be aligned on the net zero goal and the goal of making our cities more sustainable. We just need a little bit help on the policy and regulatory side to make sure that our capital that is getting deployed is also profitable and sustainable. On behalf of Standard Chartered, I would like to thank all our esteemed panelists and the audience for participating. And hopefully, together we can get to the net zero goal that we are all striving for. Thank you.
Thank you.